Welcome back. I hope everyone had a wonderful holiday season. My best wishes to all for a happy and healthy new year. My son and I, we were able to enjoy an extended vacation and the best Christmas ever with our family on Cape Cod. And now that I'm back in Vero soaking up the sun, it's a great time to talk about the real estate market here. So stay tuned and we'll go over fourth quarter statistics and also take a peek at what the real estate market may look like in 2023. Hi, I'm Bob Burbick, your local real estate agent, and on this channel, I'll show you everything you need to know about moving to and living in Vero Beach. So let's take a look at the fourth quarter statistics and see how we did. The first chart, months of inventory, shows housing inventory continued to grow during the fourth quarter. Inventory increased dramatically by 139% compared to the same period last year, and it averaged 7 months. It's clear, buyer activity has cooled. However, as the next chart shows, the increase in inventory was not a result of new listings. New listings continued their downward trend, declining in the fourth quarter. For now, sellers are holding the line. The next chart shows total active listings in the fourth quarter compared to the same period last year. Active listings increased by 32% and ended the year with 1,045 listings. Although climbing, we're still well below the typical number of listings found before the pandemic. This chart shows sold listings. Sold listings decreased by 42% compared to the same period last year. This is where the sudden and dramatic effects of higher interest rates really show. You can see from this chart just how far sales have fallen from historic levels since the Great Recession. But how is this affecting the final sales price? Well, this chart shows the list to sale price ratio for the fourth quarter. Although declining, it's still within a healthy, normal range of 97%. This chart shows the median sales price. The median sales price decreased by 14.5% since hitting our peak in June of 22. But it's been fairly stable since, and prices ended the year 3.6% higher than they did in December of 21. As you can see from the numbers, with increasing inventory and slowing sales, prices have retreated off their highs. But what does the future hold? Obviously, we don't know for sure, and as you'll see from this recent Fortune article, the 27 real estate research firms polled have forecasts all over the map, ranging from 5% appreciation to a 20% loss in 2023. And of course, I have my own forecast. A continued, near-term slow pace of sales, coupled with increasing inventory, will put downward pressure on pricing over the next 2 quarters. Here's why. The charts I showed earlier in the episode mirror what's happening nationally. Median sold price and home sales are trending down. Existing inventory and days on market are trending up. All while new listings coming to market continue to drop. We can point the finger directly at interest rates that have caused mortgage payments to rise 36% from a year ago. This truly creates a stalemate. Too many buyers can't buy, and sellers, they don't want to sell. At some point, something's got to give. All 3 of the major stock market averages suffered their worst year since 2008. Stock market losses and continued volatility in the first half of this year will cause many buyers to sit tight and keep their powder dry until the stock market improves or home prices decline. While real estate investors, who made up to 20% of home purchases in the first half of 22, have since pulled back as their investments no longer pencil out. Redfin predicts investors will purchase about 25% fewer homes in 23. This next chart shows the historic savings rate. You'll see it peak during the pandemic. I mean, it's off the charts. With all that money and pent-up demand, the result was runaway inflation. But just as quickly as savings peaked, they fell to almost the lowest levels recorded. People dipped into their savings to keep the spending going. This is further supported by the next chart, which shows consumer debt continuing to climb. In October, revolving credit, primarily reflecting credit card debt, rose by 10.4% on an annual basis. It won't be long before consumer spending habits adjust. Reduced consumer savings and increased debt doesn't help buyers qualify for a mortgage, especially at current list prices. However, reduced consumer spending should help to stabilize inflation and mortgage rates. But that still doesn't address the current high cost of housing. A rebalancing needs to take place to entice buyers of all types to re-enter the market. Sellers who want to sell will ultimately price to where buyers are motivated and able to buy. With substantial appreciation and equity in housing over the past 2 years, sellers looking to sell should be able to adjust their prices quickly without the panic or pain found during the Great Recession. And with historically low inventory and a true need for housing, a deep pullback here is unlikely in the near term. What I see is more of a rebalancing. The demand or need didn't vanish, it's simply taking a break. Some markets will rebalance more than others. I believe in our market, not as much. And that's primarily due to migration. Migration away from high-cost, high-tax states continues and creates a built-in demand that should soften any pullback in pricing here. And even with the strong rise in our property values over the past 2 years, we're still a bargain compared to our primary feeder markets. As I said in the last episode, buyers want to be here. It may just take them a little longer to get here. If the Fed gets it right and we're able to rebalance quickly, we may be fortunate enough to have a rebound in the second half of the year and slowly return to normal, consistent patterns of appreciation. Only time will tell, so we'll have to keep watching the market. So that's my opinion. If you found the data and topic helpful, please hit the like button. To stay in the know about the market in Vero Beach, hit subscribe. This way you'll never miss an update. And as always, if you have any questions about real estate in Vero Beach, reach out to me. I'm always here for you. Thanks for watching, and I look forward to seeing you on the next video. Take care.